All right, welcome to the Lunch and Learn. We're going to start in about 60 seconds. We are talking about reverse mortgages and how we can take advantage of them within the community. We've got some huge opportunities that have come our way, and this is one of them. So I'm excited to talk to you about that and answer any questions that you may have about the product. If you are part of the community and you have not already, please type in hashtag NapNation so we know what city and state you're in. And we'll get started here in a few minutes or 60 seconds or so, about 1 minute. Thank you for your time. Be right with you. Beautiful. I like that. That's amen, sister. Okay, guys. We are looking forward to get started. Okay, it looks like everyone's joining with ease. This is the Lunch and Learn, last Thursday of the month. Friendly reminder that Coffee Notes comes up the first Saturday of the month. So that's going to be the Saturday coming up. We're just going to meet here at 8 a.m. I'll have my coffee. Heck, Lord knows we even be sharing screens, being in pajamas, but just to pick each other's brains, get to hang out with each other, get exposed to each other in the community, talk about any things that we've learned, anything we want to share. That can help us reduce or flatten, I should say, the learning curve for everyone, right, out there in note investing. So come by Saturday if you're up to it and you just want to talk shop. Maybe we're the only people that understand you when it comes to your note life. So come on over here and chat up with us. That'll be this Saturday. I'm at 8 a.m. for just an hour. I'll make myself available. We'll hang out. Let me go ahead and find out where the slideshow is so I can get it moving. There it is. All right. So, as mentioned, this is the Lunch and Learn. Quick disclaimer. Everything we share with you may have different results once you buy a note, because all notes are different. But in general, we are here to share our experiences so you know what to expect. But just know that we don't have any endorsement or recommendation for you to buy anything specifically. You're going to have to come to that decision on your own, but we do have inventory. And I think I might just stop and show you guys some inventory real quick. I'm so excited about what we have. But with that said, the disclaimer, anything that you see here, we don't endorse for you to buy. You're going to have to make the decision on your own. And many of us are involved in the mortgage note space. All right, so inventory speaker disclaimer. I'm the speaker today, so do not trust the speaker. No, I'm just kidding. The speaker today, she's wild. No, I'm the speaker today when we're talking about the HECM. So definitely trust but verify everything, right? So the stuff I'm giving you, like for example, I talked to you guys about SB 1079s. Write that down. Sam Baker 1079. That's a nice niche of a way for you to get involved with real estate. So trust but verify everything that our speakers say, including myself. Because we are professionals in our own right, but we may not be privy to what is going to be applicable to your situation. Code of conduct, we don't necessarily need to do that here because we've all invested with each other for so long. This community has been around since 2013. But yeah, we're very positive, so engage respectfully, all that good stuff, and use your best judgment, as we tell our kids when they walk out the door. You can find us online at any of these places, Meetup, Eventbrite, Facebook, and LinkedIn. And what I can tell you is that our podcast is still up and running for those who like to use as an educational source. If you're new, you can check out Naked Notes Podcast. It is our supplemental guide to the training. And it still holds good today. I'm still getting calls all the time to people saying they just found the podcast and how helpful it is, right? We're going to start a new podcast here for the Private Equity Club here soon, and with Tiffany and all of us here to take you to that next phase of what we're doing, which largely surrounds larger trades and bigger acquisitions. But yeah, follow us online if you can. It's a great place to get in the groove with us and find out how we operate. Like I said, you find us on LinkedIn. We have just launched this RDMO, the Residential and Mortgage Opportunity Fund, the second one. So that's what the opportunity I'm talking to you about really stems from our relationship with PEMCO Capital. So we'll get into that in a second. I out doing a lot of we did some racing and skip past it because apparently it's loud. But we like to get out and do stay active out here in San Diego. So you'll catch us if you're ever out here and you want to do a 5K with us. We're not the fastest people on the track, but we're definitely out there on that track. Right, and the funnest. All right. These are up and coming events. I don't know if you can believe it or not, but we're almost halfway done with this year, so mind blown. But if you want to take a quick snapshot, this is how you can keep up with where we're going to be last Tuesday of every month. So as it suggests here, today it's the 24th, and then sorry, the 26th for our lunch and learn, and we will have our July 5th will be for the coffee and notes, and the 29th. Now we are having some in-person events. If you're going to be in Irvine, we are now at the Hera Hub, so come and check us out. We do the Deal Dungeon there, and so I'm going to be at the Deal Dungeon this month as well, talking about the opportunities here. So if you can come out, come and join us, meet some of the community, and see some of the inventory live, right? Tiffany's running the trade desk now. I want her to introduce herself before we get started. Just for those of you who are new to meet her. But yeah, we've got someone running the trade desk again, so we'll be fluid. We got inventory, and so she is going to be making sure that the inventory is out at the Deal Dungeon as well, so you guys can actually come out and talk to her, you know, check out the flyers and ask more in-depth questions for those of you who are not part of the community. Person. It's going to be September 27th through the 28th. So if you have not gotten your ticket, grab it. It's going to be an amazing opportunity. So let's talk about that real quickly. So if you are a part of the community, then the masterclass is half off for you unless this is your first time going. Then it's going to be complimentary. Everyone gets a free live class with us. So for example, if you just signed up just recently, then understand that, or if you have not attended a class yet, let us know, right? Because with your membership, you always get free entry to one of our live classes. So let's put it that way. If you have not cashed in on that, then let us know so we can waive it. Otherwise, it's your second, third, or fourth time. We'd love to see you. You're going to get half off, so it's still going to be a great deal for you, right? So we encourage you all to get out there because this is how we meet each other and the great joint venture partnerships are formed. And now you get a name behind the face and all that good stuff. So masterclass. Also, I'm excited because we have someone talking about how to integrate AI into your note business, right? So that's going to be huge. We cannot think we're going to move on to any level without having AI into it. So we're doing that here. So you're going to get to see how that's working for us too. We got our first beta test for our matching system coming up here next month. So you guys are going to be excited to see that. You get some more alerts on notes that are better suited for you. We also have people talking about exit strategies, of course, and there's going to be money in the room. So anyway, I can go on and on and on. Check out the masterclass. Book the date. If you need the pass to get in for free, let us know. Otherwise, it is open to the public as well. So you can go to find that on Eventbrite and get it there. All right. And that's that. Let's see. All right. If you want to opt in, you can scan this or just text 855-541-6683. That is our long-standing number, and just type text opt-in, and then they will alert you via SMS about up and coming meetings. All right. So as I get ready to discuss, all right, Mark's going to be in there in September. Let me make sure I get you that discount code, Mr. Pantech. I'm going to take a note, and we'll get you on that. Okay, I appreciate it. It's going to be now we're really going to be excited. Mark usually comes with his own inventory and opportunity as well. So known him for a good. Wow, Lord knows how long. That's it. As I get myself ready, I'm going to have Tiffany introduce yourself for a second and tell them a little bit about your background and what you're doing here. Thanks.
All right. We got you, Mark. Cool. Yeah, hi, everybody. Like Jasmine said, my name is Tiffany. I am excited to be here to run the trade desk and just, run with Jasmine to expand this, get more inventory, streamline the processes. And the better we are, the more money that we all can make, and the better that we can serve you, all of the members. Just a little bit about my background. I'm originally from the Bay Area. My background's in economics. Got that. I went to UC Santa Barbara. My master's in economics and finance as well. Started on Wall Street, just like Jasmine, back in the late 90s, and was in finance, a financial advisor, stockbroker in downtown San Francisco. And then that during the .com, I jumped ship over to high tech, and just being in the Bay Area. So I was in what's it? No, with Siemens, just in what do you call it? Just with Cisco, just networking, like network systems and telecom. That's it. And then I went back to. Then after that, I transitioned to real estate. My second love. So my cousin and I, we had a real estate development company, and then I did commercial. I was out selling, buying and selling mobile home parks and RV parks. So that was an interesting business. And then I went back to tech. Was in blockchain. Was part of the founding group for 5 years with a blockchain company, and then I got back into private equity, working with syndicate firms for multifamilies and big multifamily real estate firms in the San Diego area. I moved here 10 years ago. And now back in private equity again. I love it. Notes is it's amazing because I've been around and about private equity in technology and startups in real estate, but Notes is one of the lowest risk with the highest return investments that I found. I wish I found that years ago, but here we are, and just glad to be here. Super excited, and momentum is picking up. So we were just jumping up and down the office this week. I'm so excited. Glad to be here.
All right. Well, thanks for sharing. Let's do a transition, see if we can reduce any echo. Thanks for that. All right, guys. Yeah, a couple of things. Like she said, the risk reward ratio is amazing, but you have to know how to analyze the risk, right? So let's keep that in mind with disclosures and disclaimers, because it does seem like we're having a lot of fun over here, and we are, but we know what we're doing, right? So you don't want to just be playing with knives, but definitely know about it. Dirk Young, I did see you. We'll get you that code to get half off so you can see. I'd love to have you out at this masterclass in Irvine. Hey, leave it to me to invite you to Irvine in the middle of September, right? It's just not a bad gig, right? So come on out and hang out with us, meet some of our members, find some opportunities that you guys can get involved with together. So real quickly, before I get into this, how many of you guys, just by show of thumbs or anything, because I don't want to distract you, but how many of you guys want to take a peek at the tape we just got? Because you know how I am, right? We just got over to non-performing notes. Well, who wants to just take a peek before? All right, there we go. Yeah, let's look at that before we get into the lecture hall.
Oh, real quick, we have people staying up all night emailing us.
All right, so let's go ahead and take a look at that, because I know that's what I want to spend some time looking at too. So this is very reminiscent for those of you who were with us in the beginning. It's very reminiscent of those good old days when we had some pretty decent opportunities here. So I'm going to share this real quick with you. This happens to be, let me know, can you guys see it, the spreadsheet? Tiff, can you see the spreadsheet?
Yes, I can.
Okay, perfect. So, here, very reminiscent of the good old days. What I mean by that, here's our UPB column. Oh, most of these UPBs are $100,000 or less. Really, the average UPB is around 50, 60 if I were to look at it and probably, get my 2 cents involved. And so with that said, we're getting a discount on that. I think somewhere close about, we're paying around 75 cents on the dollar. In some cases less, right? We have to do the math on it, where this is with us taking down the whole tape, we are able to negotiate appropriately for the ones that we need larger discounts on, right? And so what that means, for those of you who have been with us, right, we take down the whole tape, we kind of blend it out. So where you can pay 75, 80 cents on the dollar, that's a great deal still. You're gonna pay that, fair handshake, and therefore that'll allow us to get some of these lower balance ones off. But for those of you guys who remember, man, this is how some of you guys started your claim to fame, right? You got it here, got a note. No one got rich enough to retire, right? But some of you guys made 70% return on your first note. How'd you do it? You brought one of these smaller UPBs, got it for maybe 9,500, right? And the property maybe only worth 70,000. Okay. Again, can you make room off of that? Make money off of that? Yes, you can. And so you might have, put in 10, call it 13, and walked away with another 10, right? On profit. So now you doubled your money. Hit the 80%, 70% return. You see that it works. Bam, you've got your confidence, your legs, you're ready to go into other notes. You have the experience. Other people want to JV with you on larger notes. Or you just take down a couple of those, right? And hit some home runs, a couple doubles. And so this is that tape again. So I've gone out here. This is my column here on Zillow that I went and just kind of comped out what I thought, because the seller had values. Last time I looked at this was 2018, which again presented opportunity because there was typically in most cases a lot of equity growth since 2018 when they did their valuation. So yeah, some of these are looking pretty nice, pretty decent neighborhoods, and a majority of them in all of our favorites, right? Remember Alabama, Bessemer. My very first note was in Bessemer. I mean, and when I tell you about the home run, I knocked it out of the park with that one. So don't sleep on Bama. You got a California one here, Florida. If you're worried about recessions or anything, this is the only time that I would really say, hey, get into Florida at this low rate, because it's not going to drop to hell in a handbasket, right? It might drop more than the average note, but or value, the homes may drop, but it's not going to go to zero in Florida, right? So if you can get in at this type of loan to value or value to the property, then it's safe to play in Florida. Got the Georgias, Iowa, that's a very lucrative place right there. Everybody knows about Illinois, some straight up Chicago, for those of you who are out there. Shout out to Dirk. Indiana, some of my favorite. John Darville loves these Louisiana ones. I mean, to get in at these prices, most of these guys, I will tell you, have been through loan modifications. So these are really, really, 9 times out of 10, we're going to take possession of them. So that's why we're going to have to be very fair on our pricing. If we need it at a certain discount to make it work, because the house is only worth 70, then we got to submit it, right? So I'll go to bat for you on that. So yeah, Pennsylvania, South Carolina, Tennessee, Texas, and then of course we love Wisconsin. For those of you guys who know, if you know. All right, so that was exciting. Let me know what questions you have about that while I'm switching over, because we can definitely chat about that as a community. But anybody see any memories come flashing back for anybody on those? Let's see. I'm gonna get this up here running. Share this tab. No questions about it? Nobody want to talk about any of that stuff? Looks good. All right, if you haven't already, then I know that Tiffany is going to send that tape out by tomorrow to the Nap Nation. Thank you
I will.
for letting us know that you got it. So she'll be sending it out to the Nap Nation tomorrow. Our Buyers Club has already received it. They're the ones that help us anchor the tape, right? So we've got about some good looks on those, and then we're going to get it out to the people who showed up to scrape the tape. They've had it since, I want to say, Tuesday. And then Friday, the rest of you guys will get it. And so we have plenty out there, and heck, even opportunities for joint ventures on these. So let's, we look forward to getting that out to the rest of you guys and you snatching up these notes. All right, without further ado, let's talk about Heckams. So you guys know me for the most part, so I won't spend too much time, but this is me. And, we started this community back in 2013, so it's pretty much been the same. I will tell you that what's different and what has changed, I think, is what I'll spend time on with you guys, is that we're in a different phase of my life as well. So when I started in 2013, my son was 3, right? His sister was, good God, maybe 10, 12. And so, you guys have watched me grow, and with that, so has my approach, and just as you guys have, right? Smitty, did you have something you wanted to say? I'm sorry, Swiss.
No, I'm fine. Yeah, I'll talk to you later about it.
Okay, yeah, let me know.
Okay.
So on that note, I'm on my 4 to 5 year. You're meeting the Jasmine's on her 4 to 5 years of retirement. Okay, so that's a different strategy altogether. That aligns with a good portion of you guys as well, right? So as usual, we have an opportunity to go through this journey together, right? And so that, I think, is a unique opportunity. Right now, with this AI and everything, I'm using it. We're all going to start using it. Is Nap Nation going to disappear? No, but maybe you're talking to the AI Jasmine. No, I'm just kidding. Right? Maybe you're talking to AI Jasmine, right? So I think it's a unique opportunity for that reason. You still have, a window. We have a lot of the originators of the company still here. The other thing is that as we move on, this business is going to get more restricted. Okay, so I need you to understand that. When we talk about the heydays of before, when you can buy notes without licenses, Baltimore is now requiring a license to buy more than one. Georgia has already required if you buy more than 10, right? So this stuff is going to continue to happen. And so again, talk about sweet spots. This is an opportunity to get in. We can buy nationwide or before all 50 states are asking you to be licensed to buy a note, right? So take advantage of this window because many of us have seen it before. And for those of us who are seasoned enough to know, you only get so many cracks at this type of whip, right? It's just life. It's just time. So I just want to highlight that. And that's one of the reasons I'm excited again, because this is another opportunity that is kind of gearing up like the past. There's going to be some changes. Obviously, we have administrative changes, but for again, banks always come up on top. So we can always be confident about that. So the other thing that's changed, we've gotten a lot more credibility, right? Street cred, right? A lot more experience. And so recently we've gotten in bed with PEMCO Capital. I don't know if you guys are familiar with them, but PEMCO Capital Management, they are out of Encinitas. They've been around for about 20 years as well. And this is the type of opportunity I wanted to bring to the community if it's going to be about a fund, right? So obviously I've been approached many occasions to start funds by different people and different things. I will tell you that this is what I've been waiting for, a seasoned institutional fund that can capitalize on these opportunities in that fashion to bring you guys real institutional opportunities, right? And so with that said, part of what's coming, that's why this call is possible. So real quickly about PEMCO Capital, they have the relationships with FHA and allow us to go in and pick up some of these reverse mortgages, right? That we can go directly to them. And so one of the things that I want to do with this community is raise at least $1 million so we can go out and pick up some of these HECMs, is what they're called, these reverse mortgages. So I'm going to pause and take it from the top. What is a reverse mortgage? Just for all of us who need a refresher on it in a second here, but that's really what has happened within that nation since we've started in 2013. We've been recognized by funds like PEMCO Capital. Okay, we've took down, I mean, you guys can understand the amount of UPB that we've taken down since I've started is well over $500 million worth of UPB between all of us, right? And so what I will tell you is that we've gotten recognized. A lot of us have made some good livings, right? And changed our lifestyles. For those of you know, the Alicia's and the Dr. Ingermans and et cetera out there. So we've made some good times out of this, but the party has not stopped. And so with this, I want to talk to you guys about the reverse mortgages, right? And so, truth be told, when I first heard about these reverse mortgages, Tiff, if you see my water, do you mind handing it to me when you get a chance?
A what?
My water. I think that's it. Okay. If you see it, you might find my purse right here. But reverse mortgages, I will be honest, when they first came out, I was 100% frightened. It was actually right here. Thank you, Tiff.
In front of you, behind the computer.
I'm busy worrying about chatting with you guys. All right. So, reverse mortgages, when they first came out, that's the devil's work right there. Okay, I didn't know what to think about it. This sounded crazy. You're going to go up to some elderly person and say, I'll take your equity out of your house. And that's all, la, 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 la. I'm not listening. That's kind of what happened. I'll be honest with you, since I heard it. But the more I started looking into it, and now we're, again, 20 years into having this product. It's been out for a while. There's a place for this, right? And so the program was initially called, I want to say, Dream. And it was there for those of us who are 62 and older. It allows us to convert part of our home's equity into cash, right? And so what does that mean? It's kind of like, I would say, just a reverse HELOC. You know, you go in and take their money out. So you take it out, but they have it into cash so you get monthly payments without having to sell your home, right? Or make any monthly mortgage payments. And so this is a huge opportunity for people, like I said, 62 and older, to stay in their homes, right? And live off the equity that they've actually earned, right? Over the last 20, 30 years, and not have to sell it to get access to it. So it's a really a program that, like I said, that in the end has its place. And instead of you paying the bank each month, the bank pays you, right? So they're dipping into your equity and they're paying you every month. And so again, as in reverse, your loan balance is going to grow over time instead of decreasing, right? So they're going into your equity. Every month they're going to go and pay you out of it. And then your loan balance ends up increasing. But again, you're not paying. So your loan balance is going to grow over time as interest and fees accrue. And then you and your heirs have the choice to either repay the loan when you move out, or if you sell the home, or if you pass away. Okay? And so the good news about it is that, again, up front, you guys are going to decide. The heirs always get to decide whether or not they want to come after the house or not, but the balance is going to be higher. They are offered to pay I believe it's about 95% they have to pay of the actual value of the home if they decide to buy it. So it's not free to them, right? They don't have to come in and take you to court and fight you over, the Nana's house. But they do have in there written that they have an opportunity to buy it from us. And if you're thinking about exit strategies already for investors, you know how amazing that is, right? Because now you have a buyer. If they want to buy it, that's great. As per the contract, 95% of the after repair value, right? Or whatever it's worth right now, I should say. The value of the current value of the home. So we still get to go on there and buy these loans at discount when we start talking about the other side of it. But again, just staying on the front end of it, it's actually a product that has found its place in the market and allowing people to live in their homes and have the equity paid to them on a monthly basis versus them paying the bank monthly. And of course, that sounds like a dream come true, all puns intended, right? So it's going to provide tax-free cash that supplements their retirement income. So maybe they're getting Medicaid to the tune of $5,000 a month, and now they can get another $4,000 or $5,000 a month from their home and apply that to the mortgage, as well as they allow you to have flexible payment options, right? So you can take as little or as much as you want. So depending on what you need it for. The cons about it, again, are going to be that the equity is going to decrease, right, over time. But maybe that's not too much of your concern. A lot of the people, here's what's funny. A good portion of our assets we get are from family offices, right? These guys, they end up doing so well for themselves. The kids end up doing well for themselves. The kids are not usually wanting to come back and take over, the business, right? Or anything. So when they end up passing away, they end up selling everything anyway, right? Not everybody wants to move into mom's, to the house they grew up in, right? And so just know that the equity decreasing is not really a big deal when it comes to the person wanting to get into it, but it just can be listed as a con, right? There are some upfront costs like origination fees may be considered high. So of course, like everybody, when the origination of a loan starts, everybody wants to get their hands involved. So if you're on the outside and you're getting it done, it still may work, but you got to let the math, right? There's got to be enough equity in there. And like I said, the heirs, they have a certain amount of time to buy it, but they're paying basically market value for this. And so that's another exit strategy for you, right? So home equity conversion mortgages, they're backed by the FHA. And for those of us who are house rich but cash poor, right, that's usually what this option is for. So if anyone has any questions about the product itself, I'm not necessarily going to go into where the rates are and all the stuff. I'm not selling you those because you know what we are. We're on the other side of the equation, right? So I'm going to spend more time on that, but it's important to know the product before we start talking about how we can take advantage of it. So take a quick second pause here and let me know if anyone has any questions or any input. Has anyone bought a HECM here on the phone? You by show of hands or want to add any input? Let me see. Give me 1 second. Hey, Tyler. Great. Are you trying to get into the meeting? Because we're still on the call right now. Yeah, no, we're in the middle of the webinar right now, so I'll look out and see. But I just saw it was you, so I wanted to pick up. But we have about a good amount of people there, so if you're available, otherwise I can call you right back. Is that okay? Yeah, I'd love to have them. Yeah. Yeah, 100%. I'll be on the lookout. It'll be a special treat for everybody. Thank you. Mhm. All right. So the reason I took a minute to grab that call because that was actually Pemco Capital right there. So that'll be a special treat for you guys, right? To actually hear from Louis Amaya. He heads the fund. He's a general partner. When I tell you this is a great guy, smart guy. We had a similar trajectory. He worked at GMAC. Remember, for those of you who know, I worked at GMAC Homecomings, their residential funding arm of GM. General Motors doesn't just build cars or sell cars. They also in the note game, right? And so I worked for them, helping them with their mortgage portfolio. And so that's where he was at the same time. So if he jumps on, he'll be able to add more about how we're buying HECMs and what we're doing for the $1 million raise. But as I'm waiting for him, and I'll keep my eye open, and Tiffany, if you don't mind looking too, let's continue on here. So if there's no questions about the actual product for the HECMs, let's talk about how we can take advantage of them. Again, this is that opportunity that institutional investors take advantage of and how they're able to get these larger returns, right? Imagine being able to go direct to the FHA right, and bid on a slew of reverse mortgages, right? Again, the first requirement for a reverse mortgage to exist or be applicable is there has to be equity in the house, right? And so right off the bat, knowing that we are usually going to go into the situation and we can do the math because we get them, right? And look at it and say, here's my offer on this property, and it's going to be the discount because it's going to be, again, based off of the unpaid balance, right? So 9 out of 10, there should be some. There's usually very little work that's needed on these because part of the requirement on the fine print of this is for you to upkeep the home, right? So when you look at that paperwork for a reverse mortgage, it requires you to upkeep the home as well, right? So part of the budget they put aside for you is going to include, for a landscaper or whatever needs to happen. And so 9 times out of 10, I prefer these as, and this would be a non-performing note category. Does that make sense? Right? I prefer these because by the time the FHA is ready to sell them, it's because the people have either moved out or passed away, right? And so we're talking about non-performing. No one's really fighting for the house because there's no fight to be had. It's either you have X amount of time as the heir to bring 95% to the table, or it's going to revert to us. And then we go in and we're obviously going to look for the ones that need the least amount of work, because the quickest strategy is then we're going to get title, right? We're going to have to go through the foreclosure. It's going to be a clear title. Here, Tiffany, can you take this call, please? One more and help them get onto the webinar.
Yeah.
Thank you. You're going to get the clear title after you do the foreclosure. So you do the foreclosure and then you just put it on the market, right? So that's the goal. You have to slide it. There you go. So that's how you take advantage of these and how you do it. The simplest way is to go in there because it needs very little work on these. Okay. All right. So they have a lot of moving parts, right? And so you have to know what you're buying and how we're going to profit it. But again, for most of us who are used to this non-performing stage, that is the given part. We know how to get out of these non-performing notes. We've got the foreclosure attorneys and all that good stuff. So as you can see, it's an opportunity for us to go in there and buy in bulk. And that's what we're trying to do, is raise at least our very first $1 million on this. All right. So typically what we need you to do is we buy in bulk, we can get more, right? And so let's talk about what's been happening with the current environment, right? Many of you might be thinking, okay, that's great, but what's happening up with the politics, right? Well, right now, they are not giving any special designations or favors to nonprofits. So that just means we roll in as our own. And that's where companies like PEMCO come in. They've got these relationships and they can go in and bid. So the more money we have, the more likely we can compete. But really, we're not here to compete with the Blackstones, right? They're going to come in and buy 50 million at a time, right, of these. And so we're going to come in there. We want to get in at least $1 million so we can grab a good portion of these, work them out, and then go back. Work them out and go back for those who want to come back in. So that's one of our short-term options to come in here and take advantage of this relationship that we've afforded via PEMCO Capital. Let's see. What other questions would you have about reverse mortgages? Right now, I'll tell you this. They typically would just release, when Lewis gets on, he's going to tell you how often they release. I believe they do the sale every 2 weeks, but don't quote me on that. He's going to tell you how often they do it. I go through them to get them, right? And so that's what I wanted to bring to you guys. But right now, they were only releasing the mortgages where everything was vacant, right? Where the person had passed away and they moved out of it. They have such a backup of properties that actually still have people inside of them still, right? So how does that happen, right? If someone passes away and, they have a cousin or uncle who are still living with them and they still haven't moved out yet, right? And so they have been reluctant to release that inventory, but they're starting to release that inventory now. So now it can be a little bit more hairy where you're going to have to do some evictions for some of these guys if they don't move out eventually. But that's the two categories that I've been made clear to me about what's happening now with FHA. They're about to start releasing those as well. So the inventory is very, very plentiful for this, as you can imagine. Products been out for a long time, so we won't have a shortage of We will not have a shortage of opportunities to get these HECM loans. The question is, and if we have time to have Lewis join the call, I don't know if he's going to make it, is how often these come out. So I will get that date again. I think they come out again every 2 weeks, or at least once a month. They release a reverse mortgage list. And so again, what we want to do is try to come together and try to raise a good $1 million or something, so we can get there and get a nice chunk, and then come back and just start feeding off it together. What questions do you have about the opportunity? How we acquire these? Why we acquire these? Is it making sense to everybody? Give me a thumbs up, a thumbs down, or just take yourself off mute. All right. Does it make sense to everybody? Let me just pick on somebody. All right, David. David, you just showed up. Of course, it's making sense to you. So silly. Smitty, give me some 2 cents. Does this make sense to you? Have you had a? I know you're pretty seasoned. Have you worked with a reverse mortgage before?
I have not, and I am really interested in doing that. I know it's going to be a fun, but I will be interested how the fund works and what you guys are doing internally on that. But to answer your question, no, I have not taken on any and haven't even thought about it, which, to be quite honest, so it's very creative that you guys are getting into that that side, because just like you, I always thought it was a scam, but after a while started getting into it lately a couple of years ago, just seeing how it works. And I guess, thinking things is a scam without being educated,
Mm-hmm.
And, now that I know how it works, it's interesting. So I'm interested and looking forward to see what you guys are going to be doing.
All right, perfect. Then yeah, we'll put you down, and obviously we'll get more education on this for sure. And yeah, like you said, that's what this community is about, right? Having a safe space where we can come and be like, girl, I was scared at first, right? Because we a lot of us have those same reactions, but no shame here. So thanks for letting everybody else know that I'm not the only one. All right, so yeah, typically, like I said, you can go in and get different values of these. So the other thing I'm going to try to do is we get this fund going, right? And then, of course, as we're out there purchasing, if you guys want to try some individual ones, then that's what we're going to be shooting for, right? But there's always something that fall out, and we can put money with each other. Or the other option is if you have yourself, right? And I don't know who's on the call, but if you got 5 million of your own, 2 million of your own, and you're like, Jasmine, I don't necessarily want to do a fund. Can I do a joint venture with you and PEMCO, right? Then the answer is yes. So go out there and raise some money with maybe 2 or 3 of your investors, right? And then now you've got PEMCO Capital's teams going up there, taking your cash. We work out a joint venture on this instead of having a fund type of relationship. So because we have a relationship with them, anything's on the table. But the first step, of course, is, hey, let's just jump in and try to do it the traditional way, raise $1 million and let them run it, so you can see what the returns are like and what the experience is like. And then, of course, you can... So there's plenty of opportunities to be creative, right? I'm just bringing you some of the most basic ones and the ones that are going to make sense to you, because the fund is going to be an opportunity for us to get involved for those of us who have minimums of like 50 to 100,000, where you may not have, again, what's required to step up to the floor with FHA right away. All right. Any other questions from anyone else? Lewis will be at the master class. So I encourage you to show up. You'll be able to spend a day with, again, a legit institutional fund manager, grill him, find out what we're doing, how we're doing it, ask him if he can slide you. I know how you guys are. Just give me one, slide me one HECM, right? But yeah, build those relationships. We're going to still extend those to our family here. So that March 27th, you're going to be able to meet Tyler and Lewis, who are also the ones who will be at the FHA grabbing those loans for us. So we're about to wrap it up. But if you guys have a few more seconds, I think they said they're going to stop by. So let's hang out as a courtesy for them. Do you have any other questions that you want to talk about? Did you want me to? I think I have a HECM list I can show you. It might be expired. But if you stick around, what'll be good is they'll show you how often these are released, right? And you might be able to ask them other questions. So give me 1 second. I will actually check to see if I can access the old tape I had. All right. Thank you, Smith. All right, for those of you who can stick around, we're just gonna wait another, we're gonna be respectful of everyone's time. We started at 12, so we'll give it another 10 minutes, but I'm gonna try to pull up a Heckam tape. I'm pretty sure I have one. When we first started talking about this, I had them send it to us just to get an idea. They do give you the strike prices for these, right? So because of your relationship and be able to go directly, they tell you what the loans are and what you need to pay to get it. Let's see if I have anything. CWCOT, PIMCO. Don't necessarily have that one. All right, I gave it a shot. All right, guys, we will be respectful of your time. Unless you have any other questions. Dirk, I'm going to make sure you get that half off. Mark, I know you just joined and you have not used your freebie, so we'll get you that thing. And the rest of you guys, you can come out. It will not be recorded online this time because we will do it on our next one. We will be having one out in New York as well. Okay? And so that we'll do that one and have that one on recorded online for everybody. Thank you for your time. Appreciate you. I'm gonna leave it open so you can get the information off the chat. I see you guys sharing stuff.
Yeah, I did. I just shared a link. Are they going as comp for members, right?
All right, hopefully you guys have time to get the stuff out of chat. I'm gonna shut this down. I'll see you soon. Give me a call if you need me.